Hi, I'm Chris Visser, and this is the August NADA Commercial Vehicle Market Update. June was a bit of a crazy month. Class 8 retail sales volume dropped dramatically, while average pricing set a record high for the fourth month in a row. The wholesale market returned opposite results, with volume recovering moderately from May, but with lower pricing. Looking at retail, the average price paid for a sleeper tractor in June was $52,673. This result is 1.9% higher than May's and 6.6% higher than last June. This higher pricing came despite notably higher average mileage, the highest, in fact, in at least 5 years. June's result was 566,492, which was 5.9% higher than last month and 3.4% higher than last June. By comparison, the average used truck sold in June of 2008 had mileage more than 100,000 lower than current. The fact that pricing remains at record levels is evidence of continued strong market appetite for trucks with under 600,000 miles. As I mentioned, volume was way down this month. June came in at 4.6 trucks per rooftop, which is a 29.2% decrease versus May. The last time this measure was lower was at the very early stages of the trucking recovery in January of 2010. A decrease of this magnitude is eye-opening, but keep in mind that each of the past 3 years has featured a one-month drop in volume in late spring, only to recover the next month. In May of 2010 through 2012, volume dropped by roughly 20%, only to recover the next month. In view of this, 2013 is notable only because the pause happened 1 month later than typical and to a moderately greater degree. Since pricing remains strong in the face of this volume decline, we're considering June's volume a somewhat natural market dynamic and expect July's volume to show a recovery. Pricing should remain at record levels thanks to the continually increasing supply of late-model, lower-mileage tractors to the marketplace, which effectively props up the overall average. Moving over to the wholesale side, the average sleeper tractor sold in June was similar in age and mileage to the previous 2 months, but with moderately lower pricing. Specifically, June's pricing was $24,751, a 12.9% decrease month over month, and a 5.4% decrease year over year. In terms of mileage, June came in at 684,699, only 0.1% higher than May and 1% lower than last June. There are no standout reasons for the decrease in pricing. An increase in the number of trucks sold in the 600 to 699K and 900 to 999K ranges may have been a factor, but in general, it appears lower prices were paid across the board. In terms of volume, June recovered about half of the volume lost in May, coming in at 3415, an increase of 10.9% month over month and 16.9% year over year. If the auction market is a rough indicator of short-term retail activity, in that dealers will acquire more trucks if they sense a retail need and vice versa, June's results paint a somewhat opaque picture. As such, we expect a continued general increase in volume, combined with pricing that should continue to fluctuate in the mid to high 20K range on average. We do not expect major change within specific mileage or model year cohorts. To wrap up, the retail and wholesale Class 8 markets continue to diverge, with the retail market primarily a channel for trucks newer than 2006 with under 600,000 miles. The wholesale market absorbs the rest. As the last of the pre-recession high-build model years, 2007s will continue to make an outsized impact on wholesale pricing as they cycle through that channel. There are no signs that market appetite for average to low mileage trucks is decreasing. Well, that's our view as of August. Be sure to read our Guidelines Market Report for additional analysis. Thanks for watching.